Oh boy, hello and good morning. It is Monday, January 10th, 2022, and it is dark and stormy outside in Florida. It's been raining cats and dogs all night, thunder and lightning like I haven't heard in months. So is that a precursor about what the markets are going to experience this week as the start of so many things are happening? Whether it's earnings, whether it's Jay Powell and Lael Brainerd in front on Capitol Hill, whether it's the CPI and PPI. So look, here's what you need to know. The Fed's triple threat continues to hang over the markets. Like I said, Jay and Lael are going to appear on Capitol Hill for the vote on their renomination by the Senate panel. Treasury yields are kissing 1.8%. Year-end calls for 2% now need to be absolutely scrubbed. Maybe try 2.5% to 3% is much more likely. Earnings to start with Delta Airlines, JP Morgan, Citibank, Wells Fargo, and BlackRock all due out Thursday and Friday. Oil kisses $80 a barrel last week, backed off a bit to end the week at $78.92, but don't look for it to really retreat very much. Demand is strong. And what are we having for dinner tonight? We're having the Sicilian Swordfish. We'll get to that in a moment. Stocks ended lower on Friday, right? Both on Friday and on the week, as markets got off to a really rough start in 2022. Friday, the Dow gave up 5 points, right? Basically no percent, zero. The S&P off 20 points or 0.4%. The NASDAQ gave back 145 points or 1%. The Russell lost 26 points or 1.25%. The transports gave back 77 points or 0.5%. For the week, the Dow gave up 0.3%. The S&P lost 2%. The NASDAQ got crushed, losing 4.5%. The Russell gave up 4.5%, and the transports ended up giving up 1.2%. The Fed's triple threat, tapering, higher rates, and balance sheet reduction are giving investors and traders and algos a bit of heartburn. 10-year treasuries ended the week yielding 1.76% after kissing 1.8% intraday. As noted, this is up from 1.35% just a couple of weeks ago on the 20th of December. Cryptos remain in focus and are under pressure for the same reasons, and we've witnessed value destruction in that space as well. Bitcoin has lost $8,000 or 16% since the first of the year and ended the week at $41,900, and this morning is trading right there. Ethereum has lost $500 of value or 14% this year and ended the week at $32.15, and this morning it's trading a bit lower at $31.50. And a host of other crypto assets are also under similar pressure. I would expect this to continue if the market cannot stabilize and moves lower in the week ahead as investors continue to assess and reprice. By now, we all know what the issue is. The building inflation story and how the Fed will manage it. It was not individually about the tapering or about interest rates or even talk of a balance sheet reduction at some point in the future that set off the alarm bells. It was the talk of all three things happening in unison that sent investors and the algos into an anxiety-ridden week. It was also the chorus coming from many of the Fed presidents and governors that suddenly gave fuel to the fire as they sang of the need to be more aggressive in light of the effects of rising inflationary pressures. On Friday, the non-farm payroll report, the jobs report, showed that we only added 199,000 new jobs in December. Okay, that's good because we added jobs, but the expectation was for 480,000. Yet average hourly earnings were up month over month and year over year, and that, my friends, is at the root of the wage price spiral type of inflationary environment a la the late 1970s that we're going to experience. It's a circular argument, right? Prices go up and employees demand higher wages to pay for higher prices, which causes prices to go up again as businesses need to recoup higher expenses or risk margin compression. In addition, the unemployment rate dropped to 3.9%, down from 4.2%. Another stunning move, which would give the Fed cover to continue down the path of tightening. There's only one problem with that stat, and that it was not that more people are working that caused the data point to move lower. It's because more people fell off the unemployment rolls. They are no longer collecting and not working. Therefore, they are no longer counted. And that allows that number to go down again. It's all smoke and mirrors. And look, this is not a Democratic or a GOP thing. It's an economic phenomenon. Both sides use it to their advantage, just to be clear, right? So I'm not picking on one or the other. Both sides use it, but understand how that stat works. The Bidens took pleasure in the report saying that, oh, he came to the White House. He has created some 6.4 million new jobs, a stellar record for anyone. MSNBC then was quick to point out that Joey created more jobs than Trump did in his first 3 years in office. Well, what they failed to say was that COVID-19 and the economic lockdown destroyed, literally wiped out 9.4 million jobs in 2020. So the 6 million jobs that he supposedly created are just 63% of the jobs that were lost as the government forced a national shutdown to stop the spread of what was the deadliest virus that hit the globe since the Spanish flu in 1918. So the creation of these jobs was nothing more than the small businesses standing up and getting back on their feet again. So I hardly can see how you can say he created those 6 million new jobs. They were old existing jobs that just came back online as the country awoke. That is, unless you choose not to tie those two data points together. And if you don't, then I guess his 6 million job statement is true, which it isn't. But hey, that's politics. And again, both sides make it up as they go along to fit the narrative that they want to sell to the American public, depending on which side of the fence you're on, is going to determine what your interpretation is, right? This is not rocket science. In any event, it is what it is. And this will continue to, help create some chaos in the markets as people discern what it all means. As we enter the second full week of trading in 2022, 3 of the 11 S&P sectors are up. Energy, XLE is up a whopping 10.5%, followed by financials up 5.5%. Industrials are up just 0.6%. Tech, XLK, and healthcare, XLV, both leading the losses lower, down 4.5% each. Consumer discretionary, XLY, off 2.5%. Basic materials, XLB, down 1.5%. The value trade, SPYV, is up 1%, while growth, SPYG, is down a whopping 4.5%. And no one should be surprised by that at all. That is, unless you've been living in a cave or under a rock. Eco data this week features both the Consumer Price Index on Wednesday and the Producer Price Index on Thursday. The CPI speaks as to what the consumer is paying at the checkout line, while the PPI reflects what the producer is paying to produce the products that go into the manufacturing process. Year-over-year CPI is expected to run at 7%. That's up from 6.8% last month. Ex-food and energy running at 5.4%, up from 4.9% last month. Year-over-year PPI is expected to be 9.8%, nearly 10%, up from 9.6% last month. And ex-food and energy, it's up 8%. That's up from 7.7% last month. Friday brings us advanced retail sales, and they are expected to be down 0.1% on the top line and down 0.1% even if you take out autos and gas. Friday is also going to bring us the University of Michigan survey with a number 70. And 1- and 5-year inflation estimates of 4.8% and 2.9%. Now, you know how I feel about 5-year estimates of inflation. I think they're worthless. So I wouldn't be planning your life and your investing around 5-year estimates, University of Michigan estimates for inflation. It's useless. Friday also brings us the start of earnings season, with JP Morgan, Citibank, Wells Fargo, and BlackRock kicking it off. Delta's on Thursday, but Delta's not a Dow stock. Estimates are to be expected to be strong in a rising rate environment. Expect future guidance to be robust. But remember, these names have already advanced ahead of these reports, like they usually do. So be careful how you play it. If you're trading it, watch how the week for the overall markets progresses. And if you're a long-term buyer, I would wait until after the announcements at this point. JP Morgan is up 10% from the lows in December. Citibank is up 15% from the lows. Wells Fargo is up 17%. And BlackRock is really only the interesting one here, right? It's actually flat and has been flat for 3 months now, kissing its trend line. But BlackRock never disappoints. So if you're going to buy any of them ahead of the announcement, maybe Larry Fink and BlackRock is where you want to put your money, right? Because again, he, like Jamie Dimon, never disappoints. So I would watch over the next couple of days. I would see if it holds, and I would see what the broader market does if you want to play. But at this point, what's the difference if you wait? This morning, U.S. futures are dancing around the unchanged line. Dow futures are up 15, the S&Ps are up 1. NASDAQ is down 15, the Russell's up 1. 10-year yields are at 1.77%. Oil's trading at $78.92. Like I said, after piercing $80 a barrel on Friday afternoon before it closed at $78.90. Gold is kissing $1,800 an ounce, and you know everything else, right? There is no significant eco data today or tomorrow. That all starts on Wednesday with the CPI report. Capitol Hill this week is going to feature Fed Chair Jay Powell in the hot seat on Tuesday as he testifies at his renomination hearing before the Senate panel. And then it's Lael Brainerd's turn on Thursday for her nomination as vice chair. So watch, because that will certainly create some headlines. Although everyone expects to be nominated, it won't be any song and dance, but it will be exciting to watch. European stocks are also dancing around the unchanged line as they prepare for the start of a big week as well. Investors there are going to be dealing with their start of the European beauty pageant, the earnings season, as well as deciphering the latest U.S. inflation data and what that means for U.S. monetary policy and then by default, European central bank policy. Remember, Eurozone inflation hit a record high in December, and that puts Christine Lagarde in the catbird seat. At 6 o'clock this morning, the FTSE was flat. The CAC is down a tenth of a percent. The DAX is down 15 basis points. Eurostock is down 15 basis points. Spain is up a tenth of a percent, and Italy is up a quarter of a percent, 25 basis points. The S&P closed on Friday at 46.77 after testing lower at 46.62. Piercing its 50-day moving trend line average, but managing to end the day just north of it. The NASDAQ, though, remains under pressure and remains between its long-term and intermediate-term trend lines. The number to watch is 14,680 on the NASDAQ. That's the long-term trend line. If it tests and holds, then we might see some stability until earnings season begins. Pay attention to what the different Fed heads are saying. Pay attention to what the CPI and PPI says about inflationary pressures. And then you'll understand why the Fed is about to do what it is about to do. And just FYI, scientists in Cyprus, have identified yet another new variant of COVID. This one is now called Deltacron, because it's a combination of both Delta and Omicron. And this is in addition to the IHU variant found in France last week. So what does it say? It says just expect another variant in the weeks ahead, and then another one in the weeks after that, and then another one in the weeks after that. Are you getting the picture? Now, remember, you can always text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it, send it off to me, send me an email, a text, give me a call. I'm always happy to engage and talk markets, planning, thoughts, concerns, ideas. Remember, you can always follow me on Twitter and TikTok at Kenny Polcari, and on Instagram at KennyP1961. So what are we having for dinner today? I told you, this is a great dish. Simple to make and really good. Sicilian style swordfish, right? Now for this, you're going to need raisins, green olives, capers, pignoli nuts, tomatoes, garlic, onion, salt, pepper, olive oil, and obviously the swordfish. It's easy to make, this dish, right? It's going to tease your senses. It's going to tickle your palate. It takes about 15 or 20 minutes to prepare, and maybe it takes about another 20 minutes or so to cook. It's enough time to set the table, pour the wine, light the candles, put on the music, and then dim the lights. Okay, so now you want to start by preheating your oven to 400 degrees Fahrenheit. This way you get it ready for when you're ready for the fish. It's all nice and hot. You want to season the swordfish with salt and pepper and a little bit of fresh lemon juice. You're going to soak the raisins in warm water for about a half an hour. You're going to drain them and set them aside because you want them to plump up. You don't want the dry, hard raisins. You want them kind of to be plumpy and juicy. Now, in a saute pan, you're going to heat up some olive oil on medium-high. You're going to saute the diced onions and the crushed garlic until it's nice and soft. You don't want to burn it, maybe 5 to 8 minutes. You want to then add the raisins and the diced tomatoes and the chopped olives, right? No pits. And the capers into this pot, right? You can always feel free to add, I add about 1 tablespoon of capers. You can add more if you want, but remember, they can be overpowering, so you don't want to necessarily overpower the dish, but it's your call, right? Remember, reduce the heat to simmer. You want to cover it and stir it occasionally for maybe 15 minutes or so. Now you want to place the swordfish in a baking dish. Cover the fish with the raisin, olive, caper, tomato mixture. Pour it right over the fish, right on top. Cover it tight, and then bake it in the oven for 15 minutes or so until the steaks are firm. Now, you want to present this dish, these pieces of fish on a warm plate. You want to put a steamed green beans on a large mixed green salad, red onions, cucumbers, grape tomatoes, maybe some fresh mutts. Dress it with simple dressing like I always like. Salt and pepper, oregano, a splash of fresh lemon juice, and either olive oil, Or you could do olive oil and a little bit of balsamic vinegar, right? But I would just do the olive oil. In any event, it is what it is. You like it the way you like it, so be creative and do what you want. But always take time to enjoy the meal. You serve a nice chilled white wine with this. You know me. I always like the Pinot Grigio Santa Margarita because it's always a winner in my opinion. In any event, the sun isn't even up yet and it's still raining outside. So I wonder if that's just setting us up for kind of a stormy day. We'll see because we'll talk about it tomorrow. Until then, take good care.